raising capital is really, it's not about chasing money. Once you start chasing money, it's really hard to catch. Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hey, welcome back to the show. I'm your host, Todd Dexheimer, and I'm going to talk about raising capital today. First off, I hope your year is doing well. It's man, it is Q3. So Q3 2025, we are halfway through the year. And so hopefully your first half was good and your second half is going to be even better. I know we're pounding the table. We're trying to get some deals shaken loose. The last deal we did was in 2025, but it was under contract in 2024. So it feels like forever ago that we did any deals. But at the same time, they got to be good deals. They got to make sense. And so patience is critical in a market that is, it's just a little goofy right now. It feels a little weird. Doesn't feel, everybody keeps, everybody, by the way, it's like, it's not just one or two people say it's the best time to buy. So my guard is up a little bit when everybody says it's an amazing time to buy. I wonder if it's not. So my guard is up, our guard is up. We are being cautious, but we're still being pretty optimistic because there's a reason people are saying it's such a great time to buy. The fundamentals are truly excellent, right? When we look at just overall real estate, multifamily, especially real estate, and you kind of look at prices are down considerably, 25%, 20 to 30%, depending on your market, depending on the asset type, all that kind of stuff. Now, prices are seemingly going up. Cap rates are seemingly starting to compress maybe a little bit more. We're seeing offers being a little bit more aggressive. We're seeing sellers be more aggressive. I think we've went from a buyer's market to maybe not a seller's market, but more of a kind of a neutral market. So anyways, keep on pounding the pavement if you're like me, trying to get deals done. But what I want to talk about is raising capital. And so if you're listening to this and you've been interested in raising capital, or you've maybe raised money before and want to raise more money, that's who I'm wanting to speak to. Or maybe you're just interested in investing in these deals. I'll definitely hit on some stuff that is helpful for you as well. So I think I want to break some maybe myths or misconceptions first about raising capital. Raising capital, in my opinion, is not for everyone. I think a lot of people, hear the gurus say it, and they're like, "Oh, everybody can raise money. It's for everybody." Blah blah blah. I don't necessarily agree with that. I think that you have to have a skill set to be able to raise money. Certainly, everybody. Well, again, still not everybody, but most people have a few people that are in their inner circle that they could raise some sort of capital from. But again, it's not for everybody. I don't think you should be looking at it if you just know yourself. I don't want to tell you not to try to learn, not to try to grow, certainly, but you have to have a certain amount of skill set, and we'll talk about that. It's also, of course, for people who are ethical, moral, that type of thing. If you're tempted to be a crook and lie and cheat and steal, do not think about raising capital for other people, because that's just not a cool thing. So it's for people who are moral, ethical, all that kind of stuff. And what are you going to do when things go really bad? Because things don't go perfect all the time. So, what are you going to do if things go bad? Can you handle bad situations? And not even necessarily are you worried about how you act ethically. Of course, you should be worried about that. But how do you actually react in bad situations. The last thing, or not last, there's plenty of other things, I guess, to think about. But the other thing to think about is how are you at communicating? And you really have to understand that because investors expect good communication. Now, I was not very good at communication when I first started raising money, and I still try work at getting better to this day. So, what I would do differently in the start is actually hire somebody to communicate with me or for me to my investors. Um, and if I didn't do that, I would make sure I spend a lot of quality time on communication because I just essentially assumed and I didn't realize my investors wanted more updates, more detailed updates, all that kind of stuff. And so, I mean, there was plenty of times where I had investors frustrated at me because I did not communicate well with them. And it, I finally realized it when some good friends of mine invested in an apartment building, smaller apartment building. They were the only investor in this apartment building. And they told me they were frustrated with the level of communication. They just didn't feel like they knew what was going on at all. And they didn't because I didn't tell them anything. And I didn't think it was important to tell them anything. I thought, and even when they said something, I was like, geez, you're just being really picky. Um, and I maybe communicated a little bit better, but not much. It was still really bad. Looking back at that, it's like, oh my gosh, I can't believe. I mean, I'm sure they were just irritated with me. I know they were irritated with me, but I'm sure they were very upset. And we're friends still to this day, which is great. But they don't invest, and I don't know necessarily. I haven't asked them if that's why they don't invest, but my guess is that's a big part of why they don't invest is because of that experience, and they just didn't have a good experience with me. And now they had invested in other deals, and we've done well. But it when you're not communicating, it's just hard to trust that person, and it gets frustrating. So I think that's a super important thing that you've got to make sure you can communicate, or you're willing to hire somebody to communicate for you, or if you're raising for a different group, if they communicate really well. So really important. Well, let's talk about just who can raise money, because like I said, I don't think everybody can raise money. I think you have to have a skill set, a personable skill set. I think you have to be able to, you don't have to necessarily be like the slickest salesperson in the world, but I do think you have to have ability to sell. And that's a learned ability. So I think everybody truly probably can learn it. But for some people, it comes much more naturally. For other people, it's going to take a really long time. So you have to think, is that really the best use of my time? Or should I maybe find a partner who already has that skill set? Probably find a partner who has that skill set, right? You have to be able to communicate. You have to be able to just talk to people and communicate so they feel comfortable and confident in what you're doing. So just think about your personality. Are you the person to raise capital? Is it something where you think you can communicate effectively with people? You think you can consistently communicate with people, communicate effectively, and just sell, essentially, be a good salesperson. Um, Again, you can learn it, but maybe you're better at something else. And it's wise to bring a partner in that is good at that side of the business. I personally think that raising capital is a business within itself. And so I think as a capital raiser, if you have a business, you might have might be you and one partner, might be you and two partners, might be you and three partners, or just might be you. But you have to realize what your role is in the company and find somebody that has the role of raising capital. So if it's your own business, you're probably going to have to hire somebody because I personally think that if it's your own business, you need to be making sure you're spending plenty. Now, if it's in the infancy stages, it's different. But if you need to be able to spend time operating the business, even if you're using third-party property management, you need to spend time asset managing those uh, third-party property managers and making sure that the construction's going well, any kind of renovations are going well, all that kind of stuff. You need to continue to find deals. There's so many different aspects of this business that you need to juggle, that if you're also then raising capital, that's when things don't go well. That's when you maybe can't grow as quickly. Again, infancy stages, it's okay. I did everything for a while there. It was just me, and it worked. But again, it didn't. I should say it worked. It worked okay. It wasn't as efficient as what it could have been, and it should have been. Again, I wasn't communicating that effectively. I was not finding nearly as many deals as what I should have been finding. When I look back at that time, it was a great time to buy. Well, I was just a solo guy. I was trying to do everything. I did not have time to be finding the deals and executing on those deals and raising capital for those deals. I just didn't have the bandwidth to do it all. So therefore, I did just much less. Right. So, but you need to make sure you're spending time on the business, or somebody in your company is spending time on the business versus just always raising that capital. So we have Endurus Capital. There's three of us. One of us is in charge of more of the property management side of the business. The other one's in charge of the acquisition side of the business. And then I'm in charge of the capital raising business. Now we all help out within the business, right? I'm talking to my partner, Matt, about the property management, and we're coming up with strategies together and things like that. But he's running the show essentially. Um, Drew is in charge of the acquisition side and the finance side of the business. Now, it's not like he's doing 100% of all decision making there. We're talking about deals together. We're talking about strategies together, all that kind of stuff. So we're still involved in the business. Drew just the other day was talking with an investor, a potential investor of ours that wants to invest in our next deal, a significant amount of money, right? So I'm not the only one raising money, but that's my main role. And you have to treat it like it's its own kind of business. And if I'm treating raising capital like its own business, that's how we are successful as a company to grow. If I'm focusing all my time on other things, then we as a company can't grow because we can't raise money for our next deal. So we have to decide what's important. Now, what's important for us is executing on current deals and growing future deals. So we have it set up to where our company is able to execute on current deals, right, with our focus on those deals, and then also acquire new deals and be focused on that as well. We have the three of us. We have partners, employees too. And so we've got that set up. Now, again, you might be at a different stage, but you got to make sure that you understand raising capital is a business. I think that's super important. It's its own kind of business, and you will only go so far with it if you're just kind of chipping away, right? All right. So let's talk nuts and bolts capital raising. How do I raise capital from investors? So I think really important thing. is that you have to be knowledgeable about what you're talking about. I think a lot of people try to get too caught into the weeds, too caught into the details, right? They're, what's my LLC? Is that the correct structure? What's all this the little things, but the minutia, and they want to get that perfect, which it's important to have, but you need a brand, and then you need to go. You need to start talking. You need to have knowledge, but then you need to start talking. You don't need to have everything. It's ready, fire, aim, right? Type of thing. It's you gotta start talking to people. I think what a lot of people do is they make, first of all, there's several mistakes, I guess. They make assumptions. They assume that they can raise money because they have a bunch of people they know that have money. So they assume they can raise money, or they assume they're going to struggle raising money because maybe they don't. So they make assumptions. They don't talk about what they're doing until they have a deal. I think this is huge. They wait till they have a deal and then they start talking to people about it. But those are confused minds. They've never really heard you talking about what you're trying to raise money for. So why would they trust you? Did you just wake up yesterday and think about this? So understand that you have to do a lot of groundwork, a lot of prep work. The other thing that people do is they try to capture everyone. Now, you have your friends and family network, but once you start expanding beyond that, I'm talking raising capital outside of your natural network, you can't just go after everyone. You can't cast this huge wide net. You can't be too generic. It's just not going to work. So what you really want to do is really be clear on who you're communicating to. Who are you talking to? And I'm not just talking about like you're talking to, this is important, by the way. You're talking to a certain age demographic. You're talking to, um, maybe a certain socioeconomic status, right? Um, those are important, right? So you're saying I'm going to talk to people that are roughly my age, which probably a good strategy, right? So I'm in my early 40s, and so I talk well with people that are in their mid 30s to mid 50s. Like that's who I'm going to talk the best to. If you are younger, you're probably going to talk really well to young people. If you are older, you're probably going to talk really well to older people, right? Just kind of how it goes. Not that those are your only investors, but that's probably who you're talking to. That's who your message is. And then, what's the net worth? Are you going for ultra high net worth? Are you going for, just your kind of largest swath of people? Those types of things. But you also want to talk to what type of people. Like now we're grinding down. Like, are you talking to a doctor? Are you talking to attorneys? Are you talking to engineers? Who are you talking to? And don't pick too many, because you can talk well to one group and poor to another group. I'm not going to talk probably well to doctors. Now, we have doctors that are investors, but they know us differently than just a random doctor that's listening to a podcast. He's going to, he or she are going to really jive well with somebody who either was a doctor or really understands the medical field and how to talk to doctors. Like that is a great person to have that as their niche, right? And so just understand who you're talking to and understand a little bit about them too. Like talk and message to what's holding people back, why your message is important to them. And so craft a message to your avatar about them. and what you know is a challenge to them, what you know is important to them. When I know my target and I know what's challenging to them and I know what's important to them, I can actually talk with them. I can actually get them to fit, right? You're going to start to truly build that trust. You're going to start to really make sure that your capital, the other thing too is like you want your capital aligned in your deals really well. And so I want to make sure I can talk to people, the right people, so my capital is actually aligned into my deals. And so I don't want to be having a message out there and talking to people about long-term cash flowing deals and that we're going to hold for 10 years when we flip apartment buildings. Like those are two totally different people. So why would I do that? If I'm flipping apartment buildings, if I'm buying an apartment building and I'm selling it within, 2 to 3 years, I'm flipping an apartment building. So I want to talk to people who value getting their money really quickly. I'm not going to talk to people who are, retiring or are retired. Like that doesn't make sense. But if I'm holding really long term, these are people who don't need their money today. They like cash flow. They like slow, steady. They are very risk averse. Like they don't want risk. And they're maybe retired or going to retire. Like they don't want something that's going to break the bank. All right. They don't want something that's high risk. Totally different people, right? So understand really who you're talking to. I think that's extremely valuable. That right there is the biggest lesson you should take from what I've said so far is you want to make sure you really narrow down who your audience is, right? Who your audience is. And really talk to them, really market to them. I need to do a better job with that. I know I do. I talk to way too many people. My audience is big. I'm casting a much too big of a net and trying to go after kind of everybody. Where I need to really narrow that down and think about who am I actually talking to, who would be attracted to my message, and then what are their problems, like what is valuable to them. And by the way, like it can't it can be as simple as what is valuable to you, because likely what is valuable to you is valuable to a lot of other people. And don't be afraid to get a little bit vulnerable too. Like that's hard, but don't be afraid to get a little bit vulnerable. um Raising capital is really, it's not about chasing money. Once you start chasing money, it's really hard to catch. It's about just attracting capital, and you want to you need to be in a position where you aren't asking for money. You have to be in that position, because if you aren't and you have to ask for money, you're just going to have a really tough time getting that money. So I said before, like one of the things that I see, and I've seen this over and over, is we talk to somebody, they're going to raise a bunch of capital. Great. I got this big network and going to raise a bunch of capital. How much do you think you could raise? Oh, easily a couple $1,000,000. And then they fall flat. They raise nothing or $100,000, like barely touch it. And they don't understand why. And the reason why is because they didn't lay that groundwork. They didn't connect with their investors. Their investors had no clue that they're even going to raise capital. So get the newsletter out there. Do a happy hour. Start talking about real estate on LinkedIn. Go on a couple podcasts if you can, if you've got enough of a presence there. Do the things to lay the groundwork to make sure people understand that you are a real estate investor. Depending on what your goals and ambitions are, join another company, right? Raise capital for them. Now, make sure you're following the rules and regulations. The SEC has very strict rules against just raising capital for other companies, but if you can maybe be on their on their team, maybe you can raise a fund. There's all kinds of stuff. Talk to attorneys. Again, you got to be really cautious about how you're raising capital. You can't just go out and raise a bunch of money and then expect to get paid for it. That's a violation of SEC rules. But if you talk to attorneys and get it figured out, talk to a security attorney. Make sure you're talking to a securities attorney. Reach out to me. I'm happy to give you some contacts, but make sure that you are following those rules. But look, leverage other people, leverage their expertise. If you're going to be sending out a newsletter, it doesn't have to be all your original work. Even to this day, when I send out a newsletter, we're using a lot of different industry articles. It's not our original work, but we're experts because, well, first of all, we do this for a living, so we are experts, but we show that we know what we're doing because we're sending information about the industry. We show our investors that we know what we're doing because we're talking about the thing we're doing, right? And they know us and they know we know what we're talking about. You have to be the same. You have to get that word out there. So that's super important. I can't beat that into you enough that's extremely valuable. So there's the two big things. First, make sure that people know what you're doing. Okay. Get the word out there. Don't just assume that you can raise the capital. Second is make sure you really connect with people and truly have them understand why it's important for them to invest and why you are a good steward of their capital. Those are the two big takeaways. Number three, I would say, is understand that this is a business and take it seriously. And if you can focus on it and put the time and effort into it, you will build it and you will grow it and you will be able to raise some serious capital for your deals. The next thing I would say is don't give up. When you start raising capital, you might be disappointed in the initial capital raise that you come up with. Maybe it's much smaller than what you expected. Don't be disappointed. Make sure you post it out on social media, celebrate it, put it in a newsletter that you closed on a deal, all that kind of stuff, and the money will continue to come in. The next raise will be a little bit bigger and a little bit bigger and a little bit bigger. And eventually you're going to be like, wow, I can't believe I can raise $5 million, $10 million for one singular deal. And it's just going to start rolling in. Now it takes a while and it takes effort. You can't just do it. It's not going to just happen. Magic doesn't happen overnight, but if you're consistent with it and you continue to do a good job, you will be able to do it. I think for those first couple deals, you need to understand what your limitations are. You need to understand how, maybe your backup plans. So if you think you're able to raise, $1 million, maybe you count on only raising $500,000. So you got to figure out how do you get that next $1 million for the deal or whatever it might be. And so make sure you have that backup plan. Maybe other partners that can help bring in the money, whatever it is. So, all right. A lot more, I guess, that I could really chip on, but that's all I'm going to cover for today. You have a fantastic rest of the day. Make every day Saturday.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe, give us a thumbs up, go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. Your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So The other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.